Hello and welcome to this week's edition of Tax in 10 with me, Rachel Souza, and Andrew Robbins. We're both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover.
Last week we talked about making tax digital for individual taxpayers. And that conversation really happened because of what we wanted to talk about today, which is a discussion paper that Hmrc has published, which is called Helping Taxpayers Get Offshore Tax Right. And that discussion paper is very much looking forward to what's going to happen under MTD. Now, it's not something I say an awful lot, but to give Hmrc some credit, they really do seem to be, on this occasion, trying to do what that title says and trying to find ways to help taxpayers do the right thing rather than just wielding a big stick and punishing them when they get stuff wrong. Now, at this stage, this is just a discussion document, which means that Hmrc is actively requesting comments from people. The ultimate legislation might not follow this, but experience shows that generally speaking, these documents give a really good steer as to Hmrc's thinking, and unless something really unexpected comes up, I think that the contents of this paper is going to have a big influence on how MTD works, how data collection works going forward. So, Rachel, what are the key points that the document looks at?
Yeah, absolutely, and I agree. It's going to be indicative of how things are going to evolve over the next sort of year to 18 months. But I think the first thing that the document talks about is a carrot and stick approach, but in a good way, because it focuses very much on the positive side and how to make things better, rather than the punishment side when things can go wrong. And I'm really pleased to see this in the document. It's one of those few documents where I actually get a feeling of Hmrc saying, we're here to help, rather than actually, I'm going to squeeze you taxpayers for everything I can get. And you know, it's just a very nicely worded approach.
Actually, I really agree with that. I also like the fact that the document specifically talks about what we mean by terms like offshore or foreign. Because I'm a nerd, I think this is a really interesting point. And I think Hmrc have understood it properly. I think they've understood that the ordinary person, if you hear the word offshore income, you think that's something dodgy. You know, like having a numbered Swiss bank account or something, rather than receiving a dividend on Microsoft shares. Even though as for you and me as advisors, we'd say, well, both of those things are offshore income because it's income from outside the UK. And I know it sounds like I'm playing with words, but I think Hmrc have identified a real problem that faces a lot of people here. I'm thinking especially about anyone who's used to having tax deducted at source from earnings, or for that matter, I don't know, suffering withholding tax on foreign dividends or something, where it just doesn't occur to them that there's more tax they should be paying on top of that. I think that genuinely a lot of tax on foreign income is missed just because the amount withheld in the other country is less than people's UK tax rate. So I think in a lot of cases, typically under double tax treaties, the tax withheld on foreign dividends might be 15%, whereas a higher rate taxpayer should be paying tax at 32.5%. So going back to what you were saying, that the nice thing about the paper is that it's not taking the approach that people who fall foul of that are tax avoiders and should be locked up with the key thrown away. But it's actually saying, well, how can we help you?
Yeah, and picking up on that point, one thing HMRC are looking at doing is whether they can pre-populate some data onto individuals' tax returns. So remember, HMRC does get information on your foreign income, and therefore there's no reason why they can't put it on your tax return. And as we understand it, it would then be for you to approve that HMRC has correctly identified the right amount. There is a little bit of a problem with this approach, though, because HMRC are provided with foreign data on a calendar year basis rather than our rather peculiar tax year basis. So if we're talking about making tax digital generally and pre-populating UK sources of income, those are reported on a tax year basis, and therefore it's really easy for HMRC to pre-populate UK source income. But it is more difficult when we're talking about foreign income because the information is provided on a calendar year basis. So with the best will in the world, HMRC are going to need the help of the taxpayer to get this right, because there will be a mismatch between the data HMRC receive and the data that needs to go on the tax return. And that's purely a timing issue. Now, HMRC are thinking of a range of ways to deal with this. And again, it's nice to see that they're thinking around the problem. So they are looking at just public communication, which could include advertising, but it also includes standard letters that highlight common mistakes. Now, HMRC have used this approach in the past, and they've presumably been successful at it because they're suggesting using it again.
Yeah, actually, if you remember, the early versions of these sort of standard letters were really quite aggressive. And I don't know about you, but I certainly had clients who were concerned that they'd received a letter from HMRC that seemed to be telling them that they'd done something wrong, and they couldn't for the life of them work out what it was they'd done that was bad. There was quite a lot of fuss about it at the time, and I think that HMRC have learnt their lesson, because I think that more recent sort of nudge letters have a much less aggressive tone and feel like they read like they're trying to help you, not threaten you. It is still quite worrying, though. You get a letter out of the blue from HMRC that does seem to suggest that you've got foreign income that you don't know anything about, when the reality is you're just getting a standard sort of circular letter.
Yeah, I think that's true. And maybe partly because of this, HMRC are also looking at a more targeted way to help. And they're calling this a digital prompt. And it looks like this could be triggered in a couple of ways. So, for example, if HMRC's computer has a record that you hold foreign shares, you could be prompted when actually filling in your tax return to include that foreign dividend that you've received. So this really is a significant change from previous nudges, because those tend to happen after the tax return has been filed. But of course, there is still a flaw with this plan, because it only helps those who actually complete a tax return themselves, and not people who have advisors like us to do it for them. But HMRC are one step ahead again. So they are thinking about how they can work with the advisors to share information to make the advisor's life easier. Now, this could involve HMRC actually sharing the information that it holds. Now, so you might find this surprising, but this is a big step forward from current practice, because one of the frustrations that we have today as advisors is that, for example, HMRC may raise an inquiry into a particular taxpayer's affairs, and they'll be asking questions based on this information that they have. But they don't tell us what it is, so we're trying to guess what on earth they've got which they need an answer to. And it inevitably leads to frustration on both sides, additional extra work which really is unnecessary, as we each try to outguess the other.
And anything that can be done to do that will just reduce costs, speed the process up, less stress for taxpayers, and a better result for the revenue as well. And I don't know about you, but I just see this whole initiative from HMRC as being really welcome. It feels like a definite shift in mindset on their side, as they're actually trying to help people get things right, not punishing them for getting things wrong. And it seems common sense. Anything that makes it easier for people to declare their income and gains properly, this must be a good thing. And I know this is only a discussion, but I think, you made this point. I think it's a big step in the right direction.
Yeah, obviously I agree with that. I do think it begs one interesting question, and that's whether HMRC should consider moving to a calendar year basis. I think that's a subject for another day.
Wow, that would be a seismic change. It'd be really interesting, but yeah, I'm not sure that anybody's got the appetite for that one.
Probably not in our lifetime. Right, Andrew, you know that I've been ploughing my way through last year's Reacher book, and I don't want to recommend that one because I think Lee Child is very well known. So have you got something that you can recommend to us this time?
I do. I have just been binging on the BBC iPlayer, a documentary series about Watergate. It's like watching a political thriller. It's absolutely gripping. It's really funny as well because the incompetence about the Nixon regime, the madness that they got themselves tied up in knots over, and it's all real life, and it just feels like you're watching a proper American political thriller where you're talking to the real people who were involved. Absolutely fascinating. Really recommend it to anybody. The series is just called Watergate. They're about 45 minutes per episode, so they're quite digestible. And really worth a watch.
Okay, I'll give that one a go. It does sound interesting. Anyway, thank you for listening. As always, please let us have your comments or feedback. We can be contacted at rachel.d'Souza@rsmuk.com and andrew.robbins@rsmuk.com. Bye for now.
Bye.